Good morning, MMTs. It's 6:15 a.m. Pacific Standard Time, and we have another super gap on Apple. And what we're going to be defining, let's define, here is where that one gap, you can see the one gap, the second gap. We're going to work with this $10 gap up here today, intraday, MMT. And when you take the parabolic 3-day topping gap in a row. It's the same kind of markets that I used to be involved in the later part of the 90s and part of 96. And there was another time, at certain time, other names used to do just exactly what this is doing here right now. And it's great. And it's going to get into levels. And the only thing that we care about it, we're not talking about the fundamentals and what the market cap is. We're not talking about any of that. Could care less. What we're talking about is where the majority of that weighting of that public is going to be way up there on that third day today. That's this third day parabolic gap, because that's what it is. It's a parabolic gap on a third day sequence. So when we break up above that 600 level, and we're going to open up in 14 minutes. Yesterday, we had a $19 and some odd change drop. It dropped down to 575 and some change yesterday on these lows. Because the lows yesterday's high was 594 and it dropped down to 575.40. Let's get that straight. Closes at 589.58. Let's get that straight. And it was done on the same amount of volume that the last sell-off. I think it was back in February 15th and 16th. And yes, you can say on a daily you're at 93.43%. Apple is weighted. So the NASDAQ 100, which is this index right here, called NASDAQ 100. Apple is 20% weighted to that, and the Apple in the S&P 500 weighting to that move. What is the actual percent weighting? Right around 4%, but I stand to be corrected, MMT, but I believe that that's correct. So we understand where the weightings are and what some of the key catalysts have been in this bull run. It's really been down to this one name right here. And, you know, there's an upgrade on it every day, $700, keeps going up $100 each day, and the prices electronically are winding in that direction. Nonetheless, we're going to tell you that bull gap 3 days in a row on the third day usually will put in that intraday high, and you would normally, in normal trends, if they're not being manipulated electronically, in the mathematical high frequency volume scripts that are done with computing machines. And that's why so many people are on the sidelines still in Apple, because they know that this has not been how many liquid net worth buyers are chasing this thing right here versus electronic trades that just simply go off in a high frequency volume price script, and how those books are balanced out. And, people only knew what was behind the tape. I am going to go and put a short out, and I'm also going to look at making a market intraday only. And here's a $600 put. We don't own any of these. 10,000 of them were bought yesterday. Boy, they were bought at the high price. And not only were they bought at the high price, they're going to get marked down again. It can happen to anyone. It even happens to me at times. The thing about it is, it can happen. We're not in it. We had up and out of the money calls with a lot of people, but the thing about it is where does the reversal come in? Like yesterday, we had over $19 reversal intraday. We're going to be looking for the same pattern at the same exhaustion highs, and 2.60 is my bid for now. And that could change to as low as, because it's a contract that expires tomorrow. It's $317, $600 put. Intraday only. enough to make coin on. But I'm going to take it to 260. I'm going to see if they even, because we open up down there, I'm safe with that entry. But if we break up above 600 and 250 on the name here in about 10 minutes, we're going to be looking for two things. Either that sell gap ratio comes into play on the open, and or that buy gap ratio walks it up to those other key levels before you roll over and go the other direction on a pullback like any bull run would, and you'd pull back about $7.50 off the high in Apple intraday today. At least that ratio from the intraday swing high, when that is put in the name, then you would get totally wholesale for a debit entry and exit, making a market on that side of the market like real bull markets are supposed to do. When you get the gap ratio, you're going to get the gap ratio down in value here. Welcome aboard, MMT, for the new ones and the people in the free 5-day trial. And not only that, welcome to the Apple computer and welcome to the pre-market trade management opening bell, 9 minutes, 3:15. Wow, 2012. And here we go once again. Here's your first, that's your second, and we're going to open up with the third one. And on the third one, we're going to see where that intraday high reversal comes in and how far it reverses. We'll just stick with it like we did yesterday. It went down $19 from the high. And that was a great side of the trade to be on. So buying that support and working it up toward the 625, 617 handle over the next week wouldn't be out of the ordinary whatsoever. However, there do have to be pullbacks within the overbought cycle. Yesterday, buying the pullbacks down there on the dips, we had people buying down there on the lows. Some people got hit at 577, 578. That's $20 higher for the long side, but then you got to get that downside move called the pullback phase. Pre-market analysis, Apple third day gap. What happens on a third day gap sequence? Follow us. We will be updating live MMTs.